Good day and welcome to Eris Lifesciences Q4 and full year FY20 results conference call. The call will start shortly. We would request all participants to stay connected. Gentlemen, good day and welcome to Eris Lifesciences Q4 and full year FY20 results conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star 10 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Bakshi, Chairman and Managing Director of the company. Thank you, and over to you, sir.
Thank you. Hello, everybody. I hope all of you are keeping well. You are keeping safe. Since most of you are from Bombay, I hope everything is okay from the health part. This is the first call which we are making in the current COVID era, as we call it. Let me just start at the company level how have we handled the situation. So after the lockdown started, the first thing we wanted to do is make sure that the confidence level and the motivation level among the people in the company are well maintained. So we jumped early to buy a health insurance policy, the COVID policy for across the company, covering everybody in the field, which was in addition to what other policy which we had, just to boost in a lot of confidence. We actually supported the entire fraternity during the lockdown by making sure that wherever we can reach out, we went ahead and provided our healthcare workers and doctors with the PPE kits and 95 masks and everything else which they needed to fight this battle. So that's about the COVID problem. In the office, we had a larger lockdown. Some of us, were still coming to the office. Right now, almost 30%, more than 30% people are in the office. We initially faced a lot of difficulty in the distribution side. Thankfully, our Guwahati was well managed because most of the people in Guwahati were staying with us there, the key people. So we had no disruption in the manufacturing side on Guwahati. We had disruption in the secondary and movement of the goods, which in the month of May actually got quite good. And at the time when we are speaking, we are more or less okay and have achieved the same kind of supply chain as we left before the COVID. Coming back to the Q4 highlights. Our sales grew by 14.3% year-on-year versus an IPM of 9.7%. Chronic therapy continues to outperform markets and sub-chronic therapies regain momentum. Eris chronic therapies grew 19.6% year-on-year as IPM growth of 12.1% and sub-chronic grew 13.4% versus IPM growth of 7.3%. In the last quarter, we also added around 97 Ds, as we have been telling you earlier that this is our 3 years expansion. So all put together, we have added roughly 400 Ds. 97 of them were added in the Q4 itself. Now again, the strength of chronic and big brands has shown up. So by the end of Q4 and also in the existing quarter, we can clearly distinguish between two very important things, which in our view will guide the future growth. One is the therapy breakup, and second is within the therapy what kind of brands you have. So a chronic therapy with large brands seems to sustain the best during these times, and that's how the trajectory was. So if you see in the Q4 at the secondary level, which is the IICD data I want to correct, 65% of Eris revenue comes from chronic, which grew by around 20% in the Q4. The sub-chronic piece, which in our case is generally the vitamins and minerals and nutraceuticals, in the month of March grew by around 7.3%, but we grew by 13.4%. Here, the reason being that we have all our brands have been, in leading position. Most of our brands have been in the top 5 positions. What we have also learned from various parts of the world where the pandemic has, it started a little earlier than us, that this therapy over a period of time has grown by 20 to 30%, even after having more than 50% penetration in the developed markets. So this is a therapy which will outgrow the other therapies in coming times, and we have good brands there. The acute part, which was around 13% of the revenue, we grew by 5%, while the market grew by 8.8%. So the acute fall continues, and now it is 13% of Eris revenue. We also importantly have made a structural change in the company. So now we are 4 clusters, 2 clusters in the chronic, 1 cluster in CNS, and 1 cluster in acute. So we've got a lot of focus on acute, and the acute therapy in our company is intertwined with the nutraceuticals. So most of the nutraceutical brands that you see are lying in the acute division. So it is the acute part of the division which hasn't done well, but the nutraceutical part in the same division has done well. And we have got special focus in terms of acute businesses, and we are doing a lot of work to basically expand our presence in the nutraceutical markets, because we feel for sure this is the market which will outgrow the industry for the coming years. So the income statement for Q4, 15.6% year-on-year growth, 24% year-on-year EBITDA growth, and 4% year-on-year growth in net profit. The 4% year-on-year growth in net profit which you see is because of the treasury income. So once we adjust it for treasury and finance cost, it is close to 20% vicinity. We actually in this year have, there's around 250 crore of cash outflow which has happened because of the buyback, the dividends, the loan repayment, and Sachin will explain, give you the breakup. So these have been the gate, and then the buyout of the Mendes which we have done. As far as the other things are concerned, we have one more study which got published again in the Indian Journal of Latent Hypertension, which is called the ABPM India study, with 2 back-to-back publications, one the Indian Heart Study and then the Indian ABPM study. We have raised our stake in the cardiovascular market. So if you look at our growth in cardiovascular market, which has just been 100 basis points above the market, and the market grew by around 12%, we grew by around 13%. And we are bringing a very sharp focus on hypertension once again. And IHS India Heart Study followed by India ABPM study are going to give us a lot of impetus in our hypertension cardiology portfolio. Having said that, I am now open to questions. You can please ask the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks, sir. A question on, you mentioned chronic will continue to outperform, and the bigger brands are more so. So just wanted to understand, for the brands which are bigger than us with other companies, could there be more consolidation there? And how do you, expect this chronic basket to grow for us for the year?
Because what we are seeing at this point of time that the bigger brands are doing better than the small brands, which is very understandable. Because of a simple reason that once these brands, bigger brands have a bigger distribution network. Their availability is good, and they have the top of the mind recall. In these times when it is difficult for the industry to meet the doctors as often as they would earlier, these things take a precedence. So everything which falls in that category will get into a higher growth. And this, I don't see this, slowing down in the coming months also. So this year will largely be more of consolidation from a large brand and chronic therapies point of view.
So this can continue like mid-teen growth, because the growth that we are seeing in this quarter is from a low base of last year, isn't it?
Yeah. So look, growth will become very, very relative now. So we will always talk about how the market has done and how we are doing. And I think the best way to look at the growth in the coming time also would be relative to the market. So if you see, April data has already come out. You see how the destruction in some of the therapies are happening and how some of the therapies are holding on. So when I say growth, it will always be relative to the market.
Okay. And you didn't mention about my first part of the question, the bigger brands, which are, say, bigger than yours, for example, they could do even better. Would that be the correct understanding?
Yeah. So logically, bigger is better. But what happens is there is also a kind of bifurcation here. The top 3, top 4 the safer statement is that top 3, top 4 will do far better than lower than 10 orders. So between the top 2, top 3, how does it differentiate? It's difficult to pinpoint. But yes, the top table will do better than the more than 10 brands, for example.
Understood. Fair enough. And second, on the cost levers. So we've been having quite a good cost control, but obviously this year maybe the first half or at least the first quarter will definitely see a dip as per IPM AICD data also. So what are the cost levers here? How much is fixed and how much is variable, and would you be able to maintain our 33-34% kind of EBITDA margins?
So Prakash, you can go through the numbers and can easily figure out how much are fixed, which are non-fixed. But generally, one more, we from a pharmaceutical company point of view, there has been always a lot of traveling expenses which we do. The traveling expenses, the meeting expenses, which had been reasonably in the market, in the books, will slow down. So that's one lever which will be there for the first quarter and then continue. So from a percentage point of view, I don't think there is any problem in the EBITDA margin which you're talking about. That is absolutely stable.
Okay, that's helpful. And last one for Sachin sir, on the cash flow, I made the opening remarks. What is the cash flow for the year and capex and the use of cash, and also if you can comment on the other income which is negative.
Yeah. So Prakash, I will just run you through the entire cash flow. How have we used the cash flow for the current year? So we had operating cash flow for the year to be 271 crores approximately, right?
Yeah.
Yeah. So we spent around 147 crores on the shareholder paybacks, which includes buyback and dividend. We prepaid the loan of 178 crores this year. We did acquisitions of around 117 crores. and there was a CapEx of 55 crores. The total outflow, if you see, is in the range of 497 crores. And the net cash that we used from the opening treasury was around 225 crores. And the conversion from EBITDA to OCF this year is 74%, which was 65% last year. We have drastically improved the conversion from EBITDA to operating cash flow.
And what is the cash balance now?
Cash balance as of today is 140. As of 31st March was 145 crores.
Okay. And last one for Amit sir is on the capital allocation. Since we are again net cash of 145 crores, how do we see this, going forward? How do we plan to utilize, since next year also we'll add on to the cash?
So, Prakash, no plans as of now. The times are quite turbulent at this point. We would like to wait and watch how things settle down. Then only we are going to be out in the market to buy something. So right now, no plans. We would like to see the market settle first, and then only it's all organic as far as I can see for this year.
Okay, thank you so much.
Thank you. The next question is from the line of Aditya Khemka from DSP Mutual Fund. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. Amit sir, so could you talk a bit about the Zomelis acquisition? So I understand we acquired the branded innovator product, but to my understanding, a number of generic competitors also launched, and that too at very, very low prices. So one, can you talk about what was your pricing strategy? Where was the price of Zomelis versus some of your other competitors? And two, then what you wrote in your presentation, a 6% market share. So what enabled you to get that 6% market share despite maybe a premium pricing as you may have had?
So, Aditya, Zomelis is priced at around 10 rupees MRP, and the generics are between 6 to 10 rupees. All the generics put together are between 6 to 10 rupees. So Zomelis is at around 10 rupees. And Zomelis had to grow from the new prescription because that's the biggest lever. So there is a little slowdown on the new prescription. That will make it little longer to grow. Having said that, I cannot share with you the numbers of the last quarter, but the way it is going, it's hitting the target which we had in our mind.
Okay, I understand. And on your gross margins, Sachin, so the gross margins have now somewhat come back to 85%, what it used to be earlier.
Yeah.
What is this a function of? Is this a function of more in-house? Because I heard that API prices have somewhat inflated given the situation in China.
Yeah.
So, how are we balancing the two? So just talk a bit about the gross margins.
Yeah, there's one factor that has played in this quarter is that we have 77% of production happening in Guwahati in this quarter. So that's one of the reasons that happened. Second part is all the API pricing impact will come in quarter one of this year. So majorly what you've seen is the stock that was manufactured and sold prior to the price impact. But yeah, there is a price impact, it will show in quarter one.
Understood. And Amit, sir, on the employee side, so I understand most of your MRs may not be meeting their targets for the March quarter or probably for the June quarter as well. And I understand that MR incentives are broadly quarterly in nature or sometimes monthly in nature. So how do you sort of ensure that your MRs stay with the company, remain motivated, keep doing their work accurately? Because you may not be paying out incentives as they are not meeting their targets. So what have you done there basically to keep the MRs engaged?
So look, we will have to adjust ourselves with the times. What we have done is what I think it's very common sensible to do. We have rearranged the targets so that there is the targets for the first quarter are a little lighter than what they were built upon, so that everybody has an earning chance.
Understood. So, but you're still paying out incentives to people who are making that.
Nothing changes. There has been no salary cuts. There has been no putting people out of the company. In fact, as I started, we were one of the few people to get of the who can get the insurance for everybody else. So, we are taking complete care and there is no cure because there is no reason for any cure in the country.
That's very good to know, sir. That's very good to know. Sir, on the promotion side, so now that the MRs are no longer visiting physicians, at least in person, the cost of visual aid, the cost of samples, free samples given to doctors. Do you see a longer term impact on these practices given the COVID change? Or do you see this as a temporary impact, the traveling cost you spoke of? So the cut down in these costs, would that be more of a temporary change and go back to normal in post-COVID era? Or do you think this is a permanent change that's now going to sort of play out over that longer term?
So let's get over this time because anything, if I say anything is more speculative in nature, I would expect that things come back to normal as soon as possible. So that is on the people front. On the doctors front, we have told you very early also that we were one of the few companies initially who have a lot of digital outreach. So we had very aggressive digital outreach in the last 2 months, and we had our infrastructure already ready. So that actually helped us a lot.
Understood. One last question, if I may, sir. So times are tough, prescription generation is low and patients aren't really stepping out of their home to go to doctor clinics, doctors aren't attending clinics. In such times, do you think these smaller regional companies or quote-unquote propaganda companies as we call them, do you think they are having a tough time to survive, and do you see therefore organized players like yourself gaining more share in the post-COVID era?
So it's the same thing, Aditya, which I started with. Bigger brands, people who have a bigger stake in the therapy are bound to improve their market share. So that is something which was already happened, but the COVID incident will only make it catalyze a bit further up.
That was my question. Would COVID basically accelerate the trend is what I'm saying?
It will definitely accelerate. Having said that, there is one part where the patients are not able to reach the doctor. The other part is that compliance in these times has become quite good because everybody is worried about comorbid situation. So at one hand, we are seeing a low footfall in the doctor's area. On the second hand, we are also seeing a very good compliance which is happening. So that's how it is working on in the market.
So this I have heard from a couple of other people as well, improved compliance. Can you somehow quantify this to me? The earlier compliance was, let's say, 80% of the given dosing.
I can't. Very difficult.
Okay. Thank you.
Thank you. Ladies and gentlemen, you may press star 1 to ask a question. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, good evening. Amit, one clarity on Zomelis. So your presentation mentioned 1,000 crore market, 6% share. I was assuming that this is what kind of 60 crore brand when you acquired. So the 6% share was before, around the time you did the acquisitions, implying about 60 crore sales at that time?
Yes.
So now with price coming down almost 1/3 of what you acquired, do you think it's not been very long, but I'm just asking that when do you think you will at least come back to the sales level what you were doing when at the time of acquisition when you acquired it?
So Anubhav, just 1 more month to go. May is already done. Another June and then July I will give you clear-cut numbers of the first quarter. We are happy with the progress of Zomelis. The prescription data of the last 4 weeks is saying that actually all the 3 brands, which were original brands, have gained market share, have gained prescription share, and quite reasonably.
But we really have to triple our volumes, right, in order to just maintain the same sales that when we acquired the brand, right, effectively, kind of.
Anubhav, the unit growth is already kicking in. If you look at the monthly numbers pre-COVID, if you look at December, Jan, Feb, the unit growth has already been, almost hitting 3-digit numbers.
Okay.
Yeah. So there is a huge, headroom available in the unit growth.
And just how this, and second, just this question on Zomelis only, how this was accounted in this quarter. So, all sales were innovator sales, but you guys put 186 reps behind this product. So full cost was there and there was no sales. Was it like this, or the cost was also not there in this quarter?
No, the cost was there. Cost was there. So the reason I'm not telling you there is there's a legal compliance which I have to bear in. That's the reason I'm not telling you the sales in the first quarter. But our people have been in the field till the time lockdown happened, and our prescription shares have kept on increasing. If you can get offline an SMS or prescription data or health checks data, you will see it for yourself. I will be sharing the numbers by the end of the first quarter.
Sure. The second question was on the receivable days. So in the September quarter, you mentioned you extended the, let's say, help to this channel that led to your normal receivable day cycle of 1 month increasing to almost 45 days. Now we see the receivable days are almost close to 55, 60 days and now end of the period. Can you just give some more light? The lockdown just happened in the last 1 week, right? So.
Yeah. And very simply, I can tell you there's only one reason. March sales were far bigger than what we expected. And so the cut-off date is 31st, so that is the reason you are seeing this spike. From April onward, it has got normalized.
And what's the new normal for us? Is it 45 days or 30 days?
New normal of the debtor days?
Yes.
30 days.
So now from, let's say, hopefully when we see your next balance sheet, we should be around 30-35 days?
Yeah.
Yes. No doubt in that.
And just last clarity on this trade generic launch, when are you planning it in the new environment? Is it a near-term thing, or you will wait for things to stabilize then launch this segment?
So, I know that the OTC disease management portfolio which I was talking about, there's a lot of work in progress, and we are launching some innovative product in that space. Again, in the side of disease prevention, and they will all be OTC-able in nature. And you will hear, some good, development on that side in the next quarter.
So this is not, is this OTC plus generic, or this is trade generic only? Sorry, I have a confusion. I'm not very clear with your strategy here.
So Anubhav, you remember last time I said we will be launching OTC-able products, which, in this category. So these are all products which are OTC-able in nature, and because of the COVID pandemic, and we were working, we have actually enhanced, we have preponed the plans which we had for this year. So there has been a couple of launches already, and we are looking for a couple of more launches in June and July. So I will be able to give you a complete picture in the next quarter. But these are all disease, we like to call it disease prevention portfolio. These are all products which help people prevent the diseases. And, COVID and virus would be a large part of this.
And most of this you will end up advertising on media, or how will it be?
There will be a mix. There will be some advertising, some BTL, some promotion. It will be a mix of everything. We will like to use all the channels possible.
Sure. Thank you.
Ensure that, we have no cash burn, and we always are a bit of cost.
Sure. Thank you.
Thanks.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal. Please go ahead.
So, just a clarity on your previous comment in terms of focus to outperform the industry by, let's say, how many percentage points, 10%, 20%, any color you can give in a steady state scenario once the COVID phase stabilizes?
Sir, I can only say that look at the April number. When the industry was down some 11-12%, we were down some 4.5%. And this is clearly the reflection of the current era and the current portfolio which we are into. And so other than that, in a normal life, when the time become normal, we will have to wait and see how it turns out.
Okay. Also help me with price volume growth, particularly for chronic and subchronic category for the quarter.
We will get to you. Kruti will get to you offline.
All right, that helps. Thanks.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Abdul Puranwala from Anand Rathi Securities. Please go ahead. Abdul Puranwala, your line is in the talk mode. Please go ahead with your question.
Yeah. Am I audible now?
Yes, you are. Thank you.
Yeah. Thanks for the opportunity. Just would like to know what would be the number of new launches that would we have done in FY20 and was always the same amount in last year?
We don't have that data ready. We will have to come back to you. Again, can you take it offline, please?
Sure, sir. Sure. And just one more question on Cyblex. So I went through your presentation and that shows that Cyblex has grown 64% this year. So could you please highlight what differently things we have done this year as compared to earlier and what led to this growth?
Yeah, so that is a little technical. Let me tell you in short, this is one product which was lying very low. Glyphosate has been lying low for the last 5 years with an average growth of less than the diabetes market through and through. We had some good things to say about that, and that's what we've been telling you how do we build in stories. So that's the reflection on that. And Cyblex has seen this kind of growth, not for the first time. Even last year the growth was similar.
Sure. And just last one from my end. Could you help me quantify what would be the growth in top 10 brands for the quarter?
For the coming quarter?
No, for the Q4 last quarter.
Last quarter, I think it is there in the presentation, sir.
Yes.
Yeah. So what I can tell you is on the annual basis, right? So on the annual basis, just let me get to that chart. Where is that? No. Okay, so let me tell you FY20 overall. So in diabetes in FY20, this is, I'm talking about 2 years, 18 and 20. 2 year CAGR is 20% when the market is 13%. So in diabetes, 2 years we were 20% to 13%. In cardiac, we were 14% to 12%. In subchronic, we were 8.4 to 8.6. And in acute, we were minus 4.7 to 9.1. So even in times when the top line growth was weaker than expected, our diabetes, cardiac and subchronic, which put together is 85 to 87% contribution, has always grown ahead of the box. So the same thing you'll see in the brands also. The top 10 mother brands, which contribute 66% of the sales, grew by 15.2% in comparison to 11.3% of the market growth.
Sure, sir. Understood. That would be all from my end. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star 1 to ask a question. The next question is from the line of Rahul Veera from Abacus Asset Managers. Please go ahead.
Hi, sir. Sir, any update on our strategy to move into trade generics?
So I just alluded to that. Right? We had launched an OTC portfolio, and this is the first quarter which we are working on that. We have already launched a couple of products, and there are a couple of more very innovative products which are to be launched. These products have been preponed because of the COVID crisis, and we are quite excited by these launches. You will get more color on how the disease prevention portfolio, which I call it, shapes up in the next quarter.
Right. Fair point, sir. Sir, and also I wanted to understand on the earlier participant's question that regarding the propaganda or the PCD marketing strategy, we mentioned that the top 5 brands are going to gain more market share. So, but eventually in the 140,000 crore market, these PCD or propaganda-based marketing monies are not even calculated. It's very difficult to evaluate, right, whether they are growing or slowing down. We might see a top 5 brands which in the AICD or IPM becoming larger and larger, but what's happening on the other side of the market, it's very difficult to gauge, isn't it?
Oh, it's always been difficult to gauge. So the right metrics to gauge has been the top 20 versus the next 20 versus the next 50. So we have seen from years together that growth has been shifting from the lower 100 to top 50 to top 20 in that manner. And that manner, that will get accelerated in these times.
Okay. Fair point, sir. Yeah. That's it, sir, from my side. Thank you.
Thank you. The next question is from the line of Ajay Sharma from Maybank Asset Management. Please go ahead.
Yeah, hi. I just wanted to follow up on the API cost, basically. You said that the impact you've seen Q1. So how much has been the average increase on your APIs, and what will be the impact in terms of gross margin for the first quarter?
100 to 150 basis points.
Okay, so but you will offset that with lower traveling costs. Is that what you're saying?
Say that again. I'm sorry, I missed you.
So you will offset that with lower traveling costs and other overheads.
I'm talking about the gross margins only, not putting it together with the other expenditures. The difference which we are expecting on the gross margins is between 100 to 150 basis points because of some APIs and other disruption. That's all.
Yeah, but at the same time you said that you will keep EBITDA margin stable, right? So I'm just saying basically you will be able to offset this with other costs, lower costs for traveling and other stuff, right?
Yeah. In fact, I don't expect any great shakes happening at the gross margin. So this 150 basis point keeps on moving even from a portfolio point of view. So I don't see quarter one getting any bad.
And what is your sourcing mix for APIs? Like how much of it comes from China?
I don't have those numbers, but it is very little from China, almost ignorable from China.
And secondly, new products. So what is the response on Rariset, and then for OTCable products and Zomelis? Basically, overall, what sort of growth contribution do you expect from new products in the current financial year?
So, just wait for a couple of more months. We will have the numbers, and we'll tell you the numbers both in the preventive disease management portfolio as well as for the Zomelis.
How about Rariset?
So Rariset is doing well. The data is available on AICD. We don't give product data unless and until either they are new or they have been brought out.
Okay, thank you very much.
Thank you.
Thank you. A reminder to all the participants, if you wish to ask a question, please press star 1. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Thanks. Actually could not connect on time, and there are a couple of follow-ups on that. So first one is, this API comment got missed out. So this 150 basis point is for the quarter or for the year you were guiding at?
For the quarter.
Okay, so that will not be material is what I understand.
It is not material, absolutely not material.
Okay, and secondly, there is a comment, if I see your balance sheet, receivables are still at elevated levels. So there was a question asked, so if we remove that, then the sales could be lower, or how should we read about it, that this is due to the COVID impact and the collections have not happened? If you could just dive a little better on this.
Prakash, there are two reasons behind the elevated debtors that you see in March. One is that we have given extended credit periods to everybody. So that's one of the reasons. The second part is that we had increased sales in March. Whatever comes in March is always as a receivable, because the cycle comes after 1 month. If you compare it to last year March sale was much lower than what we had this year. So this is how the comparison happens. This is not the normal one, which we have seen this entire flow. We have seen the collections of April. We have seen the collections of May. So I can tell you that we are very much back to the old trade base and everything.
Okay, so we have not lost sales per se, but we have done some extra sales is what you are saying in March.
Yeah, Yeah, March was a sales growth, Prakash. All the chronic therapies saw, increased take-up from the market, because the long-term patient actually had taken more than what they would usually take.
Okay, because I'm again repeating, I mean, the YOY comparison of 16% should not be done, right? Because Q4 of last year was very soft. So, I mean, in a real terms, how would we have grown if we adjust for...
You forget about inside. You see how the market. So you see at quarter 4 where the AICD is reporting 11%, we are reporting 16%. So forget about the quarter base. Let us talk about the current stuff. So we are, at least 40% above the market in the fourth quarter. And in the same breath, let me also tell you, we don't disclose the prescription data, but our prescription data in February, March was at a peak.
Okay. And last one on market share trends, in the diabetes front and cardio, which are our major categories. So, would we have data versus fiscal 19 to 20? How would we have moved in diabetes franchise as well as cardio franchise?
So look, the easier way to look at this, Prakash, if I have outgrown the market, then my market share must have gone up in the therapy as a whole. So last year, before that year, every year our market share in diabetes and cardiovascular would have gone up because we have outgrown the market, outgrown the therapy. That's a broader way to look at it. If you want to know the final details in terms of brand, you can just check it from the ICD data, or we could help you getting that.
Okay. And last one on, sub-segments. So in diabetes and cardio, would you believe there are still enough room for us to get inside and create more brands?
So, nothing changes. It's only the footfall in the doctor's level has, fallen for some time, which will get normalized over a period of time. Other than that, nothing changes. The market will remain robust, and as our strategy of launching new products is very well in place. On that, which we had alluded in the last call, that how we are looking at non-patented and other markets. So all those things are online.
Okay. Thank you so much. All the best.
Thank you, Prakash.
Thank you. The next question is from the line of Ashish Thakkar from Motilal Oswal. Please go ahead.
Yeah, thanks for the opportunity. So on the nutraceutical side, how would you gauge the propensity of the people to pop up more, say, vitamins, minerals, especially during such times of pandemic? And would you say that we could actually see a new normal wherein people might be popping up more immunity booster?
Yeah, I think so. And there is enough data from China, Korea, and other parts like Europe and US, where we have seen while the pandemic was fully blown up, the sales had gone 30% higher from the nutraceutical point of view. And these countries have a very large penetration from a nutraceutical point of view. So yes, we expect there will be a new normal, and vitamin D, B12, zinc, these are the preparations which will get a lot of boost up.
So these are all RX driven, right?
Yeah, it will be RX driven. Some of it would be over the counter also, but basically it will be RX driven also.
Okay. Sir, and second question on the industry level, how do you see the movement of doctors, especially most of the private practitioners have kept their clinics closed? How do you see those guys coming back, and opening? What's the status there?
So I feel June would be almost 70-75% normalized, and maybe July onwards, even the footfalls will start increasing. But when it will come to a level which it was pre-COVID is difficult to say at this point in time.
Okay, fair enough. And lastly, would you like to put a number for the IPM growth for FY21, just in your assessment?
No idea. I would not like to do that.
Okay, no problem, sir. All the best. Thanks.
Thank you.
Thank you. The next question is from the line of Anshul Sehgal from Kotak PMS. Please go ahead.
I have two questions. One is, could you speak a little bit about Remlin D and Tayo? And the second is on Zomelis. In the previous call, you had mentioned that the NRV is around 3 to 3.5 crores a month. Is the run rate somewhat similar for this quarter as well, or has it changed?
Zomelis, I have repeatedly been saying that give me 1 quarter, the reason I can't share with you the numbers. First quarter, this financial year, we will share the numbers with you. Regarding the Tayo, again, it comes to the same thing. These two brands are one of the leading brands in their categories, and we are seeing some increased uptake. And if what the earlier participant asked is the new normal, then these are the markets which should see relatively better growth than the industry.
And I'm sorry I may have missed this, but could you just suggest why you are seeing an uptick?
Because what is happening now, everybody understands that you have to live with the virus. What you can do, our WHO recommendation is very simple. They say body, surface and space. So when they say body, they mean the immunity. When they say the surface, they talk about fumigation. The same for the space. So these are three very broad guidelines from the WHO. And just because of this, we feel that the immunity market, which basically immunity is enhanced by the nutraceuticals. That's the basic science. So when you talk about immunity, nutraceuticals have the most prominent place there. So just because of this, these markets should overperform.
Got it. And finally, just one question from me. I joined in a little late. I missed your comment on APIs. Could you just the cost of APIs? Could you just please repeat that again?
Yeah. So there was a question which was put. I'll just briefly put it up, or you could see from the script. I'll just briefly put up. Then there was a question: how is the API cycle looking forward? So we said that yes, there was some turbulence, in the month of April, May. But because we are one factory where we do 77% last quarter, 70% rather, and we like to scale it up to 80%. Most of our APIs were sourced well. So we don't expect more than 100-150 basis point movement in the gross margin. That's it.
Got it. Thank you.
Thank you.
Thank you. Before we take the next question, we would like to remind our participants, you may press star 1 to ask a question. The next question is from the line of Abdul Puranwala from Anand Rathi Securities. Please go ahead.
Yeah, hi. Thanks for the follow-up. So just would like to understand in terms of the channel inventory, now when we say that we had a good month in March, so typically, because post-March there was subsequent lockdown and I understand we have a good chronic portfolio as well. But had we witnessed a sudden surge in the inventory days of the channel, and is that normalizing now, or some comments on that front, please?
So actually, it was not a surge in the inventory. It was actually a drop in the inventory because of supply chain issues. So actually, it is getting corrected.
Okay. Okay. And would you like to quantify any number where your inventory levels were prior to March, and where would they stand currently?
At the industry level, you can refer to the data which AICD gives. So they talk about the month-on-month inventory level across the companies and also as a whole. So on the whole, it went down because of supply chain disruption, and now it has gradually started coming back to normal.
Sure, sir. Fair enough. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Amit Bakshi for closing comments.
Thank you. Thank you for taking out time. My earnest request to all of you is practice the three things: social distancing, sanitization,